Hello traders, hello everyone, my name is Gregor Horvat and welcome to our new video surfing the Elliott waves, where I will look at some of the most interesting and important markets for this week. This video has been brought to you by Orbex. I will look at the US dollar, euro, of course, S&P 500, dollar yen, crude oil and dollar CAD. Now if we take a look on US dollar index first, now we have seen quite a nice move to the upside over the last few weeks. We've been tracking and turned bullish after a break above 107. Looks like that this five-wave recovery that we've been tracking over the last few weeks is now coming to an end. Now we are moving into this potential resistance here, the fib levels of this fourth wave. So it looks like that fifth wave could be slowing down here. We also see a divergence on the RSI, which is very common whenever we are in late stages of recovery. At the same time, I'm observing a potential ending diagonal here. I'm not sure if this will play out, but certainly it suggests that this overlapping structure points towards bearish price action, because bulls are struggling at this stage. You can clearly see that the current price move is much slower, despite higher highs, higher swing lows, but it's much slower compared to the previous very sharp moves. So it means that bulls could be moving into some resistance levels. So just be aware, at least for a free wave setback. Now, of course, a lot will depend tomorrow on the ECB policy decisions. As you know, we are highly waiting on this potential new rate hike. ECB members were very hawkish over the last few weeks. They said that they have to fight inflation. So we'll see if they will be very aggressive or less hawkish than markets expect. But certainly I think that a positive impact on the euro could help to bring the inflation down. So I also believe that they are watching these currency rates as well. We are approaching on long-term charts towards this 0.9 psychological level. Somehow it was also intervention back in 2000. So certainly not an easy call to say that we are bottoming just yet, but definitely multi-year support suggests that maybe this cycle could change over the next 2 years or so. Now, from an Elliott wave perspective, looking at the daily chart here, we can count 5 waves down, at least from here, from 1.1175. So these 5 waves suggest that we could be potentially bottoming, and as I said, the key will be how will the ECB what will ECB do with their policy decisions. Will they be very aggressive or maybe less aggressive and hawkish, and not that hawkish? Also, there were some positive comments from Putin, some not really that positive, I mean, but they could resume this Nord Stream pipeline. So we'll see if this will have any impact on the euro. But generally speaking, of course, Europe needs an energy, and whenever this will be the case, it means that economy could be put back to normal. Not to mention that this potential cap on energy prices by the European Union. So we'll see how this will work, but certainly from a technical perspective, I think that there can be some rally coming in the near term. So if euro would be higher tomorrow, then obviously US dollar index would come to the downside. However, there's still very important risk of moves across the board. Now, looking at the S&P 500, we made this overlap with 39.50, potentially with 5 waves down now. So maybe this trendline support on the 4-hour chart could limit the temporary drop. So watch out for any kind of a recovery. Ideally, there will be a free wave rise. 4,000 is first resistance, the second is 4,100. So these are the levels to watch for potential new next further sell-off. And whenever this pullback occurs and you see back move to the downside, that's when US dollar could again be very attractive. So we'll see how the euro, I'm very interested to see how the euro will play out tomorrow during the ECB, because the risk off is still here. Now let's take a look also on dollar yen. Now dollar yen is moving to the upside. Of course, it has a lot to do with the US yields, which are still rising. So dollar yen here, I think it's breaking out of this out of this fourth wave pullback, looking for a move into fifth wave. There is an upper trend line resistance right now that could be retested here, so maybe some short-term pullbacks definitely could be seen away from 145, but generally I think that there's even room for 150 to be seen in the next few months. Of course, nothing moves in straight line, just be aware of some pullbacks. Now looking here at the 4-hour time frame, notice that this fifth wave that I'm tracking, well, should be made by 5 waves, right? Now this is wave 1, wave 2, and notice that you have a very sharp and strong extended lag now. So it looks like that this is still blue wave 3, meaning after pullbacks there should be more gains coming. So as long as we are trading definitely above the previous highs here, I think that this trend is very clear and bullish, but definitely maybe quite late for any new longs, but the next fourth wave retracements I think could be quite interesting. I will keep an eye on those for myself as well. Now let's take a look also on the crude oil. Now crude oil came to the downside. Maybe it has something to do with the European potential reform on cap energy prices. We'll see how this will play out, but generally speaking, also I forgot to mention that we have new lockdowns in China, so this is something that is driving the prices currently to the downside. But if OPEC will somehow will limit the outputs, of course this will again have maybe some positive impact on energy. Generally speaking, crude oil, in my opinion, it has some overlapping structure down here for the last few weeks. We are potentially moving into this lower trend line of this wedge formation. So again, watch out for potential rally. In fact, on the hourly chart, we've been tracking lately this contra trend free wave movement. I said that we should be continuing to the downside to back to a new lows, and this has recently occurred with 5 waves. And whenever you have this 5-wave cycle and this sharp reversal, well, at least temporary low is now in place. So I think that there is room for more upside, especially after a pullback. Okay. Also, let's take a look on dollar CAD. Now you have Canadian monetary policy decision today. The expectations are again hawkish, but now it won't be that much of what they will do in current meeting. But if they will remain hawkish or ready to hike rates further on the next meeting, so this is something that will drive this this currency pair. For now, I think that there's still potential very late stages of this corrective advance from 2021 lows. We are potentially moving into this new resistance as we approach the 2022 highs. So still, this ending diagonal, I think it's a very valid formation to be in late stages with this wave C, but still there is room for 143.50 maybe. Even in the short term, it looks like that this if I label this for you real quick, it looks like that this was wave 4 recently, so maybe some final push to the upside could be in the cards. But as I said, everything will depend on the upcoming reaction to the Bank of Canada decisions. Okay, if we'll see from a new high, from new 2022 highs, 5 waves drop, then this will be our signal that trend is again changing, and this could be very nice if at the same time crude oil will stay supported, or as I showed you on the earlier charts. Traders, thank you very much for your attention. I hope that you enjoyed this video. Talk to you soon. Bye.